Hi guys, I'm Alice, finance broker at Swoop Funding. Welcome to episode 6 of Fintech Happy Hour, where we will be diving deeper into the SME Recovery Loan Scheme, Phase 2, with Swoop's Head of Commercials, Scott Weddle. Welcome, Scott. What are you drinking today?
I'm drinking a green tea.
Oh, well, I'm drinking a vodka orange. So, Scott, what is the SME Recovery Scheme?
Yeah, so the SME Recovery Loan Scheme is basically in the form of a loan is provided by finance providers, which is guaranteed by the government up to a certain percentage. So there's a select panel of lenders which participate in this scheme, including the 4 major banks, and the government, as it stands today, will act as a guarantor for the loan for 50% of the total amount.
Okay, so how does this loan, how can it help our clients, or how can it help businesses, SMEs in Australia?
Yeah, so the SME Recovery Loan Scheme was basically designed to help small businesses bounce back from the impacts of COVID-19. So it allows a lender to take a holistic approach when it comes to an affordability assessment, not just looking at the here and now, but also looking at previous trading history of the business prior to COVID. Well, first of all, I want to point out that there's no restrictions on what type of industry you're in to be eligible. However, a really great example of this would be the hospitality industry. This industry has seen some of the worst impacts of COVID, with venues shutting down, restricted capacities. So under this scheme, the lender has the ability to look past the immediate impacts of COVID, so look past the lockdowns and review the business and how it performed prior to that, thus giving greater borrowing power and a greater ability to bounce back for these types of businesses. So the main aim of the scheme is really to help the small businesses recover, consolidate, and also grow and plan for their future post-COVID.
Yeah, that does sound very useful for our clients and SMEs around Australia, because I know quite a few businesses have been affected. So are there any key features in this scheme that make it stand out from others?
Lenders under the scheme are allowed to offer borrowers a 24-month repayment holiday, which basically allows a business owner to fully invest in their business without having to deal with the repayments for the period of the repayment holiday. And where that comes in handy is particularly a business that has been recently impacted by COVID, is maybe still recovering, they'll have that 2-year period after they've got the funds to grow the business back to where it was before they need to start repaying that. Another interesting feature is loans can be used to refinance existing debt, including those from historic SME recovery loans. The interest rates are capped at maximum around 7.5%. There is room in there for any interest rate movements, but as it stands at the moment, the maximum is around 7.5%. They can also use it to purchase commercial property. They can use it to acquire a second business to help with the growth, or they can use it just to reinvest in the business for business growth and to recover. So you can borrow up to $5 billion under the scheme as well, and the loan terms can be up to 10 years. What that allows is 120 repayments, thus making it more affordable for businesses. Loans can be either secured or unsecured. Because the business is acting effectively as a guarantor for 50% of the loan, it allows more of an option for the unsecured facility.
So are there any eligible loan products under the scheme extension?
Yeah, so listen, the range of products vary, and there's products for all types of businesses and all types of situations. So some of these include secured and unsecured debt funding, invoice financing, trade financing by the form of a line of credit, asset finance and refinance, and business acquisition finance as well. So what that does, that gives us a choice to sort of recommend you the best loan product to suit your needs and the best instrument that's basically going to help your business recover.
Right, and how does a business know if they're eligible or not? Are there certain criteria that they have to fulfill?
Yeah, I mean, there's criteria, but really the way you've got to think about it is, has your business been impacted by COVID in any way? If it's been impacted by COVID in any way, then you could be eligible. But this isn't just limited to a financial impact. It could be potential maybe loss of staff. It could be a number of reasons. So any business that's been impacted by COVID would be eligible. To find out if your business is eligible, the best thing you can do is reach out to us and have a discussion with us directly, and we'll be able to advise you on it.
So how can Swoop help? What can they do that I can't do elsewhere?
Yeah, well, given our relationship with the lenders and our knowledge on the lenders under the scheme, it basically allows us to advise on what you're eligible for and ensure that you get the right product for your business. I think on top of that as well, we help you. I think on top of that as well, we guide you through the full application process end to end, just to make sure that your business gets on the path to COVID recovery in the right way. We make sure that you get the best product that's right for you, and just give you completely, unbiased advice throughout. Really, we want to see your business succeed like it used to before COVID, and we want to help you do that any way we can.
That sounds great. So you guys should all sign off on our platform, and me and Scott will have a chat with you about SME recovery loans if you're interested.